Investors all around the world are focusing their attention on dividend stocks because they are a reliable source of passive income and because a recession is approaching in the foreseeable future. Free cash flow is the cash that is left over after a firm has paid all of its expenses and operating expenses. Dividends are paid out of this cash flow and are only distributed by businesses that have solid financials. Therefore, the degree of dividend sustainability is determined by the firm's strong free cash flow. Here are 6 dividend stocks for cash flow. Number 6. American Express Company. The American Express Company is a credit card service provider based in New York that also offers other travel-related products and services to individual customers. The operating cash flow recorded by American Express Company for the second quarter of 2022 was over $4.2 billion, which is an increase over the $3.8 billion reported in the first quarter. Additionally, the company's free cash flow increased to nearly $3.8 billion, up from $3.4 billion at the end of March when it was recorded. Its yield on free cash flow was 11.2% at that point. The American Express Company has a very solid history of dividend payments, and for the past 3 decades, it has maintained a consistent schedule of distributions to its stockholders. As of the 1st of August, it has a dividend yield of 1.35% and is currently offering a quarterly dividend payment of 52 cents per share. In the first quarter of 2022, there were 69 hedge funds that own interest in American Express Company, which is an increase from the previous quarter's total of 64. When compared to the interest controlled by hedge funds during the preceding quarter, which were valued at $29 billion, the total value of these investments now exceeds $33 billion. Number 5. Chevron Corporation. The Chevron Corporation is a United States-based energy conglomerate that produces and retails a variety of fuels, including gasoline, diesel, aviation, and marine fuels, as well as fuel oil additives. The Chevron Corporation reported a cash flow from operations of $13.8 billion during the second quarter of 2022, while its free cash flow amounted to $10.6 billion. The amount of cash and cash equivalents accessible to the company at the end of the first half of the year was over $12 billion, which is an increase over the $5.6 billion that was available at the end of December 2021. As of the 1st of August, Chevron Corporation has a dividend yield of 3.47%, which corresponds to a quarterly dividend payout of $1.42 per share. The corporation has a track record of increasing the dividend payout every year for the past 35 years. HSBC, a financial service company, raised its rating on Chevron Corporation to buy in July and set a price objective of $167 for the stock, stressing the buyback policy of the company. The same number of 53 hedge funds maintained interest in Chevron Corporation at the end of the first quarter of 2022, as they did in the previous quarter. The total value of these stakes comes close to $28 billion when added together. With almost 159 million CVX shares, Berkshire Hathaway was the most significant shareholder in the company during the first quarter. Consideration should also be given to Chevron, which is among the most prominent dividend stocks, alongside companies such as the Coca-Cola Company, Johnson & Johnson, and the Procter & Gamble Company. Number 4. Target Corporation. The Target Corporation, an American chain of big-box department stores, reported having more than $1.1 billion in cash and cash equivalents at the end of the first quarter of 2022, with total assets totaling about $18 billion. Over $424 million was distributed in dividends by the company during the quarter, representing a 32.4% increase compared to the same time period in the prior year. In addition to this, during the first quarter of the year, it repurchased shares worth a total of $10 million, demonstrating excellent financials. The free cash flow yield for Target Corporation in FY21 was 6.6%, and the company earned more than $5 billion in free cash flow during that year. The Target Corporation stated in June that it would be increasing its quarterly dividend from $1.08 per share to $1.20 per share. The corporation has a track record of increasing the dividend payout every year for the past 51 years. Its payout ratio is at 27.9% as of right now. The dividend yield on the shares was calculated to be 2.46% as of the 1st of August. It was given an overweight rating by Wells Fargo in August, and the firm has set a price target of $195 for the company. The number of hedge funds of Target Corporation increased to 50 in the first quarter of 2022, up from 49 in the previous quarter. Nearly $3 billion is the total value of all of the holdings that are owned by hedge funds. During the first quarter, Arrow Street Capital maintained the largest position in the company. Number 3. International Business Machines Corporation. As of the 1st of August, the dividend yield was 5.05%. The International Business Machines Corporation is a multinational technology corporation based in the United States that conducts business in more than 171 countries across the world. It recorded a net cash flow of $1.3 billion from operating operations during the second quarter of 2022 and generated free cash flow of $2.1 billion during the same period. The return on its free cash flow was 8.5% at the time. The business had an accessible cash balance of $7.8 billion when the quarter came to a close, and it distributed dividends to stockholders totaling $1.5 billion during the period. It has a strong dividend history. The company has been paying dividends to shareholders continuously since 1916 and has maintained a 27-year record of growing its payments. As of the close of business on August 1st, it has a yield of 5.05% and is currently offering a quarterly dividend payment of $1.65 per share. It had its price target increased $157 by Morgan Stanley in July. The investment firm also maintained its overweight rating on the company's stock, indicating that it believes the company will do well in the second half of the year. At the conclusion of the first quarter of 2022, 43 hedge funds held a bullish position on International Business Machines Corporation. These hedge funds held interests in the company valued at more than $1.16 billion collectively. Number 2. Abbvie Incorporated. As of the 1st of August, the dividend yield was 3.93%. Abbvie Incorporated, a biopharmaceutical firm based in the United States, reported an operating cash flow of nearly $5 billion and a free cash flow of over $4.7 billion in the first quarter of 2022. At the moment, the yield on the company's free cash flow sits at 8.6%. The dividend yield for Abbvie Incorporated is 3.93%, and the company pays out a quarterly dividend of $1.41 per share. Since the beginning of the last half-century, the corporation has maintained a pattern of annual dividend increases. In the first quarter of 2022, the number of hedge funds that owned interest in Abbvie Incorporated dropped from 82 in the previous quarter to 76 in the current quarter. The total value of the holdings that these hedge funds have in their portfolios is greater than $3.6 billion. Arrow Street Capital was the largest stakeholder in the company during the first quarter, holding stakes worth about $754 million. This made Arrow Street Capital the largest hedge fund investor in the company. Number 1. Exxon Mobil Corporation. It posted a healthy balance sheet for the second quarter of 2022, indicating that it had generated $20 billion in cash flow from its operating activities. The energy business reported a free cash flow of $16.9 billion, which is a significant increase from the $10.8 billion reported in the prior quarter. During the year under review, it made a total distribution of $7.6 billion to its shareholders, of which dividend payments accounted for $3.7 billion. The free cash flow yield for Exxon Mobil Corporation is 8.8%. It has maintained a track record of steady dividend growth over the past 38 years. It has a dividend yield of 3.63%, and the dividend it pays out is 88 cents per share on a quarterly basis. It was a favorite stock among elite funds in the first quarter of 2022, as 83 hedge funds owned interest in the firm, which was an increase from the 71 hedge funds that owned stakes in the company one quarter earlier. More than $8.55 billion is represented by the total value of these stakes. It is currently receiving attention from analysts and investors, much like the Coca-Cola Company, Johnson & Johnson, and the Procter & Gamble Company. What did you think of our video? Let me know in the comment section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.